The Business Roundtable publishing the results of its quarterly CEO Economic Outlook Survey. Our Kayla Tausche has that in Washington, and we'll break that release. Kayla?
Carl, after peaking a year ago, CEO optimism is on the decline. The barometers for sales growth, investment, and hiring over the next 6 months, they remain above average, but have all dropped to levels seen in the early days of the Trump administration. Outlook for GDP growth for the second and third quarters fell to 2.5%. Josh Bolton, the CEO of the Business Roundtable, which conducts the survey, says tax reform and deregulation have helped investment, but, quote, as we encounter a potential softening of global economic conditions, it's all the more important to advance policies that will promote American innovation and strengthen the U.S. economy for the long term. On the policy front, each survey includes a specific question. In the past, it's been on trade policy, but this quarter it's on data privacy, and 80% of respondents said it's important for Congress to write a national consumer privacy law. The BRT conducted the survey by polling 139 CEOs between February 20th and March 8th, rather. It's chaired by JP Morgan Chase CEO Jamie Dimon. We'll sit down with him and American University President Sylvia Burwell to talk about workforce initiatives and the economic outlook overall. That interview is happening in the 1 o'clock hour. Guys?
Yeah, really interesting results there in terms of consumer privacy and potential for regulations. Kayla Tausche, thank you for bringing us those results. Speaking of CEO confidence, shares of FedEx getting crushed this morning, posting a miss on earnings while cutting its full-year guidance for the second time in 3 months. CEO Fred Smith warning of a global slowdown, only the latest chief executive to raise a red flag on the topic. All right. We're going to bring in Steve Liesman to talk about this and what it means in terms of economic growth globally and here at home as we await more details from the Fed later today. Steve.
Yeah, Morgan, I don't think the last two stories you had are unrelated. In fact, I'll say they're actually related. Let's talk about it. BRT survey coming down, and it came down in an interesting way, back down towards the levels of the early Trump administration. By the way, that parallels the NFIB, the Small Business Survey, which also came down. And then you have FedEx saying that, hey, it's the global slowdown that's hurt. So I think there's two things in here. One is obviously that you have to wait and see what happens with the global slowdown. The second one are these trade policies. Both in our Fed survey and in other surveys, a lot of businesses are complaining about these trade tensions and how they've upset business. So there's a bit of a wake-up call here, I believe, for the Trump administration when it comes to this issue. They've done a lot to help business on the tax cuts, a lot to help business on the deregulation. Are they throwing it all away with these trade policies and these trade tensions?
Yeah, it's a key point, right, in terms of all the uncertainty around trade, whether it's U.S.-China trade talks or some of the other talks we have going on with other nations, also the uncertainty around Brexit and what a resolution there will look like. How much of this do you expect to color the conversation in terms of the Fed this afternoon and the press conference with Fed Chair Powell?
Yeah, good question. I think it's one of the major roadblocks out there. The global slowdown. But we have to ask, how much are the tariffs part of that? And the Fed would certainly like to see a little more clarity on the issue of the global outlook before it, say, resumed its rate hikes. I think a big important issue here is how much that knocks on to the U.S. And in our CNBC Fed survey from yesterday, Morgan, what we found is that economists expect about 0.4 percentage points or 40 basis points to come off of GDP this year because of the global slowdown. And by the way, the last year or so, it may have added 0.5 point. So I think the Fed is factoring that in. It's an uncertain relationship, but certainly you can expect some effect on U.S. GDP to come from global economic weakness. And you see it, by the way, maybe magnified. It may be worse, Morgan, when it comes to the earnings of S&P 500 corporations. What could be 0.5 point to GDP for the U.S. economy could be more for individual companies like, for example, FedEx.
Steve, we talk a lot about U.S.-China trade tensions. Interesting to me that FedEx specifically pointed out Europe as a weak point in its report. How does that fit into the broader economic narrative the way you see it?
Well, you know, look, a lot of American companies, they may have a lot of growth in China, but they do a lot of business in Europe. So that's a big factor. Also, you know, FedEx has been in Europe for decades now. So it's a huge factor. And I will say one other issue that's out there is that there's some concern that, let's say we do a deal with China. And by the way, 80% of our respondents expect a deal to be done this year. There was a couple comments about, hey, what if the Trump administration pivots and gets into another trade battle with Europe on autos? So the idea that this could be over with just the U.S.-China trade deal, we may move the focus to a battle with Europe right after this.